Hey there, future investors. Let's demystify the stock market together. Think of it as a giant marketplace. Buyers and sellers come together to trade pieces of companies. These pieces are called stocks. It's that simple. You can buy and sell them, hoping to make a profit. Are you ready to dive in? Let's get started. Ready to dive. When you buy a stock, you're not just buying a piece of paper. You're becoming a shareholder. This means you are now part of a larger community of investors who have a stake in the company's future. That means you own a tiny slice of that company. Think of it as owning a small piece of a big pie. The size of your slice depends on how many shares you own. Let's say you buy stock in Hindustan Unilever, the company behind Dove soap and Lipton tea. These are brands you might use every day, and now you have a financial interest in their success. You now have a stake in their success. When the company performs well, whether through increased sales or successful new products, the value of your shares can increase. If they do well, their stock price goes up, reflecting the company's growth and profitability. And so does your investment. This can lead to significant financial gains over time, especially if you hold on to your shares and the company continues to grow. But remember, just like any market, prices can go down too. Economic downturns, poor company performance, or market volatility can all lead to a decrease in stock prices. That's the risk we take. Investing in stocks is not without its challenges, and it's important to be aware of the potential downsides. But don't worry, we'll talk about managing that risk later. There are strategies and tools available to help you navigate the ups and downs of the stock market, ensuring you make informed decisions. Let's look at a real-time chart of Hindustan Unilever's stock price. See how it moves up and down? That's the market in action. Sometimes the price goes up, sometimes it goes down. Our goal is to buy low and sell high. But how do we know when to do that? That's where things get interesting. We need to understand what makes those prices move. The stock market, like any market, operates on the fundamental principles of supply and demand. This dynamic interplay is what drives the fluctuations in stock prices, creating opportunities and risks for investors. When more people want to buy a stock, demand, than sell it, supply, the price goes up. This is because the increased demand signals that investors believe the stock is valuable, pushing its price higher. It's like bidding on a rare item on eBay. The more people interested in the item, the higher the bids go, reflecting its perceived value. The opposite is also true. When more people want to sell a stock than buy it, the price falls. This indicates that investors are losing confidence in the stock's value. If more people want to sell than buy, the price goes down. This can happen for various reasons, such as poor company performance, negative news, or broader economic downturns. But what drives this supply and demand? It's not just random. It's influenced by a myriad of factors. That's where market sentiment comes in. Market sentiment is the overall attitude of investors toward a particular security or financial market. It's all about how optimistic or pessimistic investors are about a company's future. Positive sentiment can drive prices up, while negative sentiment can lead to declines. Understanding these sentiments is crucial for making informed investment decisions. Section 5. Riding the waves of market trends. See how Hindustan Unilever's stock price has been generally moving upwards over time? That's an upward trend. Learning to spot these trends is key to making smart investment decisions. Of course, past performance is not indicative of future results, but it gives us valuable clues. Remember, investing is a marathon, not a sprint. We're in it for the long haul. Section 6. Tata Consultancy Services. Another perspective. Now, let's look at another Nifty 50 giant. Tata Consultancy Services, or TCS. TCS is a global IT powerhouse. Their stock chart will look different from Hindustan Unilever's. That's because they are in different industries and each company has its own story. This highlights the importance of diversifying your portfolio. Don't put all your eggs in one basket. Section 7. Decoding the language of charts. Stock charts might seem intimidating at first, but they are simply tools to visualize price movements over time. By understanding these charts, traders can gain insights into market trends and make informed decisions. Traders use various indicators to help them make sense of these charts. Indicators are mathematical calculations based on the price, volume, or open interest of a security. One common indicator is the moving average. It is used to analyze data points by creating a series of averages of different subsets of the full data set. It smooths out price fluctuations and highlights the overall trend. This helps traders to see the bigger picture and not get distracted by short-term volatility. See those lines on the TCS chart? They represent the moving averages over different periods. Those are the 50-day and 200-day moving averages. The 50-day moving average is often used to gauge the short-term trend, while the 200-day moving average is used for the long-term trend. They can help us identify potential buying and selling opportunities. When the shorter moving average crosses above the longer moving average, it can signal a buying opportunity. Conversely, when it crosses below, it might indicate a selling opportunity. By understanding and utilizing these indicators, traders can make more informed decisions and develop effective trading strategies. This knowledge can be a powerful tool in navigating the complexities of the financial markets. Section 8. Technical versus fundamental analysis. A powerful duo. We've talked about technical analysis, which focuses on charts and indicators. But there's another crucial aspect: fundamental analysis. This involves digging into a company's financial statements, understanding their business model, and assessing their management team. Think of it like this. Technical analysis tells you to buy or sell, while fundamental analysis tells you to buy or sell. Combining these approaches can give you a powerful edge in the market. Section 9. Diversification and risk management. Protecting your investment. Remember, investing always involves risk, but we can manage that risk through diversification. Don't put all your money in one stock or one sector. Spread your investments across different companies, industries, and asset classes. Think of it like a balanced diet for your portfolio. A little bit of everything keeps you healthy. Section 10. Bringing it all together. Hindustan, Unilever, and Tata Consultancy Services. Let's revisit our examples. Hindustan Unilever is a consumer goods giant, while Tata Consultancy Services is an IT leader. By investing in both, you're diversifying your portfolio and reducing your risk. By applying both technical and fundamental analysis, you can make informed decisions about when to buy, hold, or sell these stocks. Section 11. Unlock your financial future. The stock market can be your ticket to financial freedom. It's a powerful tool to grow your wealth over time. But remember, it's not a get-rich-quick scheme. It requires patience, discipline, and continuous learning. But hey, that's what we're here for. We'll guide you every step of the way. Section 12. Claim your financial calculators. Want to take your investing game to the next level? We're giving away a special bonus to our engaged viewers. We have 5 financial calculators worth 21,000 rupees to give away. These calculators are packed with features to help you make smarter investment decisions. Stay tuned to find out how to claim yours. Section 13. Join the conversation. Did you find this helpful? Hit that like button and share this video with your friends who are ready to start their investing journey. Don't forget to subscribe to our channel for more stock market insights and tips. Happy investing!